Hi guys, welcome to Dividend King Investing. So this is my portfolio update. My last portfolio update was a while ago. I think it was when it was around £3,500. I had some comments saying, "Oh, there's no growth in your portfolio. This is, really bad portfolio. You haven't made any money." But I had faith in my strategy, and it's paying off so far. So here, if we have a look at what's happened, so for a while I was tracking, and I wasn't really doing too well. I was down a bit, but I kept on investing. I kept putting in money throughout this COVID crisis, and as you can see, there was a big dip, and I was down about 7%, and at this point is when I really started putting in more money, and I put in a lot. And as you can see, I invested about 1,000. And then luckily the news about the Pfizer vaccine came out, and I went up I was down about £400, and then I jumped up £339 in the space of a day, which is actually a jump of almost, what is that, 700 quid. And then I continued to buy, and now I'm up 7%. Now, what this dip is because I've been trading Premier Oil, so I'm just waiting to buy back in. But yeah, my portfolio is now up about £641, and the portfolio value is £10,000, as you can see on the top of the screen. I have some money in cash, about 650, which I'm going to reinvest into Premier Oil. So in terms of my thinking, I had been very heavily invested in oil companies after the COVID crash, and I kept on averaging down. The only company I didn't average down in was ExxonMobil, but that was after I decided that it wasn't actually the strongest company, and I invested more in Chevron. As you can see here, I'm up 9% in Chevron, with an average price. I bought in at what's my average? $76 a share, and I've been saying this for a while. It's going to recover. These are unreasonable prices. They were so low, and I just kept averaging down, and now I'm up nearly 10%. And Chevron also had a ridiculously good dividend yield. I think it was around 7% when I first started to buy it. So I've secured a really high dividend yield and capital appreciation as the oil industry recovers. Then another company I like is Enterprise Product Partners. They have a huge amount of cash on hand. They're involved in pipeline and oil and gas infrastructure, and they have around a 10% dividend yield with a very strong balance sheet. You know, they have a very look at this, nearly 10% dividend yield, and I'm up about 10% on that investment. So very promising. I still like this. I'm still planning to buy more. I think it could really recover strongly. Exxon, I was bullish on initially, but after I did more and more analysis, I realized that they are one of the weaker oil companies, major oil companies. I just don't believe that they have very good capital controls. They've invested very heavily in the Permian Basin, and as we've seen, onshore fracking projects have been really badly affected by the oil price crash. They're not very competitive, and generally their balance sheet's quite weak. Their payout ratio is extremely high, and they've had to cut staff in order to maintain the dividend, which doesn't really look too good. So I've decided not to reinvest in that or to average down. And although I could have averaged down, I'd still been up. But I decided my investment would be better placed in stronger companies like Chevron and BP, Shell, and Total. So I'm planning to actually exit Exxon soon. If it can recover a little bit further, then I'll probably exit and reinvest that. Other companies, I'm up 16% on JP Morgan, which was as a result of the vaccine news, which is really nice to see. MasterCard. Now with MasterCard, I'd been hitting myself on the head before when, the last price crash happened, and I didn't take advantage of that to buy back in and to really lower my average. So when there was this big drop back down to about $290 a share in end of October, I really poured in money, and that's paid off nicely. So I'm actually up about 10%, 9% on MasterCard. I also did the same thing with Visa. Visa dropped quite heavily. Let me get Visa up. Yeah, so Visa dropped quite heavily, and I really bought in at this point when it was around $180, and now I'm up about 8%. The 2% down is basically the pound to sterling financial. What's the word? You know what I mean? The cost of dollars to sterling. But the oil company that I invested most heavily in was Total. After a lot of analysis, I realized that they have the strongest balance sheet of any of the super majors. They had really good cost control. They had been making sure that they were profitable at around $30 a barrel. They had the really low production costs, and I just thought that this is a very strong investment. And so when it dipped down to around €25, I really bought in heavily. I mean, I had been buying it at around $34 euros a share, and I just continued to average down, and that really paid off big time, because I'm up 21% on that investment, which is really good, and I've got about a 10% dividend yield for all that. So, which is going to equate to about £25 a quarter in dividends. WP Carey, I was very happy when I saw that they dipped, and I bought almost right at the bottom when they were around $62 a share, and they've now recovered up to $71 a share, so I'm up 13% on WP Carey, which is a real estate investment trust. And one of the reasons I invested in it was that I noticed that their dividend yield was extremely high. It was about 6.5% when I invested in it, and so I've got a really good yield, and it's very competitive with Store Capital and gosh, what's the other one? Let me find it. Realty Income. Realty Income's been a bit disappointing for me. I'm up a bit, but in terms of the FX impact, so the exchange rate has brought me down a little bit, so I'm sort of just about breaking even, but I've received dividends, so I don't really mind. It's a bit of a boring, stable investment, but hopefully it'll bounce up. Another company that I'm very pleased with is Store Capital. I really went all out in Store Capital and invested a large amount of money in it. And when it was dipping down, I'd try to buy a bit more, but I just held out, and now I'm up 18%. Which is fantastic, and I've got a 5% dividend yield secured, so that's brilliant. So I'm just going to hold that really and rake in the dividends. Yeah, so that's a general overview. Another company I really liked was Prudential. They've recovered nicely since the news of the vaccine, so they're insurance company. I'm up 11%. So yeah, definitely good news for value investors. Yeah, so pretty good stuff. I think it's interesting that Dominos has declined or dropped off a little bit since things have started to improve, but really not by very much. Since the vaccine news, it's gone down a couple of percent, but I think with Dominos, it'll do well either way. If there's no vaccine or if there is a vaccine, it'll be absolutely fine. Oh yes, BP, another big investment. I bought really low on BP. It was so low, and now I'm up about 16%, so that's brilliant. So yeah, very happy with how things have progressed. Now, one of the other companies I'm going to invest in, or I'm investing in, is Premier Oil. Let me find Premier Oil. PMO. Premier Oil has just been in negotiations with Cryosol, which is a massive company, which has just agreed to a reverse takeover of Premier Oil. to become the UK's largest oil and gas producer, bigger than BP or Shell in terms of barrels of oil produced per day. And they've also agreed to write off the debt, because Premier Oil had massive debt. If you can see here, if we go down to the balance sheet, they had 81% debt to asset ratio, so massive crippling debt. And therefore this deal has saved them, and they're going to write off their debt and pay it off. And with a very interesting, quite complicated structure of what's going to happen in terms of the deal. So I initially bought in at around 17p a share, and now it's gone up to 20. So if I go into the history of what I've done, I bought in quite heavily at, I think I was averaging around 18, you can see here, around 18p per share at the fill price, 19p. And then I sold that off today for 20p, made £63 profit. But I really should have just held, because right now it jumped up literally at the end of the day by about 5%, which is quite frustrating. But I'm hoping on Monday morning when the market opens it'll drop down again and I'll get back in. I think that this could go back up to 40, 50, 60p a share. So yep. Thanks guys. Please hit the like button and subscribe if you enjoyed this content, and look forward to hearing your comments.